Hey, Richard Matthews of Matthews Wealth Management. Today we're going to be talking about the order of savings. So some of you out there may not have started saving for long-term goals such as retirement or college education for kids or estate planning, starting a business, buying a house, all these different savings ideas. Where do you start? What type of accounts should you be looking for? What different advantages are out there? And most specifically, there's an order that we want to look for when evaluating where to put our dollars in savings. So the first one that we're going to look at is take advantage of free money. That's pretty self-explanatory, right? So first thing that jumps to mind here on free money would be a match contribution from an employer, like in a 401k. So an example of that, let's say that your first 3% that you contribute of your salary to a 401k gets matched dollar for dollar. So you get that free 3%. It's 100% rate of return with absolutely zero risk. So definitely take advantage of that. Let's say maybe the next 2%, they'll match you 50 cents on the dollar. So now you've put in 5% and they're matching it at 4%. Take the free money. Inheritance, anytime you got a stimulus like what's been going on lately after COVID, always take free money for investments and for long-term savings. The next area we want to look at is tax-free growth. So there are some examples that come to mind from some previous videos we've done. A Roth IRA has tax-free growth. You want to take advantage of putting back the maximum contributions so that those dollars are growing from here on out without any tax liability. Another example for college planning would be a 529 plan, where if you use those funds for tuition and room and board or books, you can use those gains without paying taxes as well. Municipal bonds is another area where you can put non-qualified assets and get some tax-free interest. There are a number of other areas that we're not going to dive into, but free money, tax-free money. Third area we're going to look at is tax deferred. So we already just mentioned one of these with the free money in a 401k. That's tax deferred, right? So your income's going in pre-tax and it's growing without having to pay that tax liability now. Obviously down the road it is taxable, but that is the third best place or the third order of savings. So what we would do in our hypothetical is contribute the 5%, we'd be matched our 4%, we'd go max out a Roth IRA or maybe even a Roth contribution inside of your 401k, and then we would come back and do more savings into the rest of our tax deferred portion of that same 401k. So that's just one example of retirement savings. The last area that we want to look at saving is going to be taxable. So taxable is just CDs at the bank or a non-qualified brokerage account. Real estate counts as taxable. I'm not talking about the merits of investing in real estate. I'm talking about the type of accounts and how each of these, the earnings and growth on our investment becomes taxed. So pretty straightforward, just follow the free money, tax-free, tax-deferred, taxable, and you can't go wrong. Hopefully this is helpful. Come back and join us next time.